All right. So we look at question one. It says Thomas pays insurance on his motor vehicles at an annual cost of 12 million. All right. During the year to 31st December 2014, he paid a total of 14 million on insurance costs. Show the profit and loss extract and the balance sheet extract as at 31st December 2014. Okay, so in this question here, we are dealing with prepaid expenses, right? Prepaid expense you pay for in advance, all right? And a prepayment is considered as a current asset. Okay. So in this question here, we have to find out how much the prepayment is. Once we find the amount the prepayment is, then we make the adjustments for the prepayments. Okay, so I'll also include some journal entries so that we see the whole picture of what is going on here. So let me just bring this here. All right, so let's first look at the journal entries here. All right, so let's get the first journal entry, which is the payment of this insurance. All right, so whenever we are paying for an expense, all right, the two accounts that are involved are the expense account and the cash or bank account. All right, so whenever we're paying an expense, we debit the expense and we credit the bank or the cash account. All right. So in this case, we'd say insurance expense we debit 14 million. So basically the method here we're using is for the prepaid expenses, the expense method. All right. This is where we have to find out. This is where we determine the prepayment and we also find out how much of the money that has been used. So insurance expense we debit 14 million. All right, so we'll credit the cash account 14 million. Remember, cash is an asset, a decrease in an asset, you credit. Let me also open the T account so we get the full picture of what is going on. All right. We want the cash account is not necessary for this, but the insurance expense account, this is the ledger or the T account, insurance expense. All right, so we have 14 million on the debit side. So now here we must figure out how much is the prepayment. All right. So the annual cost of insurance is 12 million. This covers 12 months. All right. But he paid 14 million. All right. So here basically I think this 12 million divided by 12 months, that's 1 million per month. All right. As his insurance. But here he paid 14 million. So he paid for 14 months. But remember, a year is 12 months. All right. So we're going to deduct this 12 million from the 14 million to determine our prepayment. All right. Because this 12 million at the end of the year, it has been used up. This has been used up and the remainder hasn't been used up. So that's the prepayment. So to get the prepayment, you're just going to say 14 million minus 12 million. That should give us 2 million. All right, so that 2 million is our prepayment. All right, so this is the journal entry, the year end journal entry adjustment for the prepayments. This 2 million here, we're going to debit it to the prepaid expense account. And this same 2 million, we're going to credit this insurance expense account. So let me show the adjusting journal entry at the end of the year, 31st December. So you debit prepaid insurance. This is our prepayments. You debit prepaid insurance. $2 million. And we credit the insurance expense account, 2 million. Now, this journal entry here is going to show what happens in the statement of profit or loss, and also what happens in the balance sheet. All right. So by debiting this prepaid insurance expense, 2 million, we've recognized we've got our current asset. This is our current asset or prepaid insurance. So on the balance sheet extract, which the question wants you to show, under current assets, you're going to say prepaid insurance, 2 million. Then this, where we're crediting the insurance expense, 2 million, on the statement of profit or loss, all right, whenever you see additional information and they tell you about a prepayment, that prepayment, you always deduct it from the expense that is shown in the trial balance or that is shown in the information given to you. All right. So this 2 million here, we're going to credit it to the insurance expense account. 14 million minus 2 million. This is 12 million. This is the expense that should be reflected in the statement of profit or loss. This 12 million is the expense. So let me just show the extracts of the statement of profit or loss and the balance sheet. So now a statement of profit or loss. Mute your mic, mute your mic. Statement of profit or loss. You're going to have rent expense, and then you want to say less prepayment. So the rent expense here is 14 million. Then we deduct this prepaid rent of 2 million. 14 minus 2, this is 12 million. So this is the amount that should appear in the statement of profit or loss. 12 million for the insurance expense. I don't know why I said rent expense. Insurance expense. Then in the balance sheet, under current assets, we are going to find prepaid insurance. So this is the balance sheet extract. Okay. No, this 12 million. No, it's the insurance expense for the year. Yes. As you can see, insurance expense less prepayment, 12 million. Or if you wanted, you can say insurance expense, then you put in brackets here 14 million minus 2 million, 12 million. Right? There are different ways you can show that. Right. So here, balance, yes. We're making adjustments for the numbers that should appear in the financial statement. Oh, prepaid insurance. I don't know why I was like saying prepaid rent. Prepaid insurance, um, 2 million. Yes.